All right. Good morning, ladies and gentlemen. We are going to talk about earnings names, names that I feel are going to do well, and I'm going to cherry pick my favorites, share them with you in a positive way, not cherry pick like, some gurus do on just their winning trades. We're going to talk about earnings, crypto thoughts, and we're going to take live, unfiltered questions in a real-time basis. I am Mark Melnick, and this is the Newsbeat Show. Kindly read this next slide, pause it, read it in its entirety. This is for, I don't know, educational purposes only, not giving stock picks, investment advice. Thank you so much for reading this. All right, let's go ahead and start here. So, let's talk about some of the earnings here, and we're gonna start off, and I'm just gonna take you down just a little bit here. We're going to start off here with Shopify, and the name has been on just quite a run recently. It's just been really strong, and we're going to talk just a little bit fundamentally, a little about their last earnings report, so you could get a little sense of where they could potentially be going. So last time they just absolutely decimated decimated the numbers. I mean, they reported on October 29th. They reported in the morning. And the stock gapped up about 23 points here and then sold off. Now it's exuding a little bit more strength. They're still not providing their financial outlook. I do find this stock rather interesting. It's not going to be one I play. They are reporting Wednesday morning. So we're just going to go down a little time frame. I'm not focusing on any of the names reporting Tuesday morning because we're walking into it tomorrow. It wouldn't do you much good. I'll also share with you a couple overnight trades I took and what I personally bought. So we'll go through that too and how you can obviously get access to that. So, all right. So on Shopify, you know, again, this is like the jewel of Canada. This is, I think, Canada's number one market cap company over here. And you know, with everything that's going on in the world, I'll tell you right now, there are certain companies that are going to benefit massively from this whole COVID crisis. I think Shopify is one of them. I think a lot of businesses have been transitioning, and Shopify is no different. Shopify is definitely one of those businesses that have to transition. I will not be taking a play in this, and again, I will share with you the names I really like for earnings. I'm just saying Shopify isn't one of them, and I just felt, that I wanted to go over it a little. It is interesting. We'll see what they have to say. As long as if they're smart, they're going to take literally the words of our government, basically saying that, that they see this COVID crisis lasting longer. They see this mask wearing lasting longer. They see all these things lasting longer. Anything that's insinuative of stay the F away from human beings from each other, I think is going to bode very well for a company like this. And again, you'll see. I'm I state how I feel. I'm never trying to inject my opinions into anyone. I like people to come up with their own opinions, whether they differ from mine or they agree with mine. And I just try to share with you some of the information. So moving on here, we're going to move on also Baidu. Baidu is going to be reporting Wednesday after the close. And Baidu has had a tremendous run. Hot newsbeat name. We've been all over this stock. And the big news, of course, with Baidu is that they're going electric vehicle. They've been delving into electric vehicle comps. They've been considering doing the artificial intelligence for autonomous driving, into maybe making their own vehicles, into both, into all this. So, doing anything with electric vehicles is, literally the new sexy. It's literally the new sexy to make electric vehicles. Let's talk about a little about their last earnings report. What I'm trying to do is just really show you where these companies have come since the last quarter that they reported up until now, and things that we could actually learn that might be useful to us. Last quarter, they reported $3 a share. That blasted the $2.05 expected, almost 50% better. They edged forward in revenue versus consensus, 4.16 billion, ahead of the 4.14 billion expected, and they've just been doing, really, really well. It'll be interesting. I'm not really super excited about their revenue number. I think they have room to really improve on revenue. Street is expecting 4.38 billion. I don't think that. I think they can edge slightly ahead of that. I think it's going to come in around 4.4 to 4.5 billion. And you'll, by the way, you'll see how accurate I am when they actually report their earnings. Like you'll see with most of the things that I tell you here that there's very high correlation. Like, wow, he said that's what, you know, anything can happen, of course. But I think for Baidu, the big thing here on Baidu will be for them to talk and delve further into the electric vehicle world. Start sharing what you're doing. They're raising money for an AI chip company, so they want to do their own chips, which are in short supply. Electric vehicles, and if they come and they blast any news on that, that could bode particularly well. You guys want to know a stock now that I really like for earnings? How about I give you two of them? We're going to start with AMAT. And I know you've probably been hearing it if you've been, watching the market over the past 2 weeks and watching headlines. You probably have seen several headlines talking about chip shortages here in the United States. Ford had a problem with their chip shortages, or they were having issues literally, building their, what is it, their F whatever trucks they could go forward themselves. Um, just looking at here at an AMET, I think this company is going to destroy it. I think they're going to crush it. I think the revenue is going to be over $5 billion for this quarter. The consensus was 4.5 billion. I think they're going to come in 10% or more better than expected. I think they're going to crush it on the earnings per share side. You know, to have a chip shortage and to be a chip company is a good thing. Just like it's good to be a McDonald's or Burger King if there was a burger shortage. Anytime there's a shortage of something and you're inside that market, there's lower supply. So even if the demand stays the same, which it hasn't, the demand has been spiking, there's lower supply. Now, why do I think AMAT's going to F and crush it even harder? A lot of the chips have been being chewed up in the marketplace for all these crypto mining rig operations. Mining cryptocurrency has become a sexy thing again. It's become worth it because electric prices obviously haven't moved up percentage wise like Bitcoin has moved up. A lot of people's electric bills have dropped or stayed the same. Very few people have seen their electric bills go up. So, what does that mean? It means literally for every kilowatt of electricity you spend, that stayed the same. And if you're actually setting up a mining operation, meaning you're trying to leave your computers on and heat up your house and things like that to create cryptocurrency out of thin air by just running these mining rigs as they call them. These things become sexy again. So as cryptocurrency shoots up, and we'll talk a little about that too, as cryptocurrency goes up, it's it bodes really well. And the funny thing here is AMAT, and I'm going to show you right now on the charts. AMAT last reported on November 13th. AMAT last reported on November 13th. So what I want to show you now is I want to show you, hold on, I'm going to just pull up a chart. I'm going to show you exactly where Bitcoin has gone. 1 second. I'm going to show you exactly where Bitcoin has gone. Let's just pull up Bitcoin US dollars right over here. And remember, so what I was saying was AMAT reported back in November. So literally AMAT reported the exact date, November 12th. So just to give you a little context, here's where AMAT was on November. Here's where Bitcoin was at. I'll move my mug to show you the massive move. Here's where Bitcoin was at on November 12th, right over here. Bitcoin was trading as high as $16,000. Since then, Bitcoin has pretty much, tripled since then. So this is where Bitcoin was when AMAT announced earnings. It's a semiconductor chip company, right? Look what has happened since. What are the odds you think AMAT's going to effing crush it and hit it out of the park? Again, I don't give stock picks or investment advice. I currently don't have a position in it. That may or may not change. But I think the numbers are going to come in astronomically well. they're going to crush it. Nobody likes to talk about that right now, but a company like AMAT here, I think are going to absolutely kill it on earnings. As a result, it'll be very interesting to see what happens afterwards. Another one is, of course, the trade desk. And this one always gets me because it's an $860 stock. One of the stocks that I haven't been really, following too heavily in the past few months. And in my head, I'm like, the trade desk was at like $200-300 stock. And then you look and it's like $800 and you're like, whoa, what happened? Like one of those names that like got away from you, you know, because you haven't been like watching it in a couple months and all of a sudden they exploded. I think this company's going to absolutely kill it. I think this company's going to absolutely crush it. They're going to destroy the earnings expectations. Earnings expectations consensus is 252.6 million. I would be surprised to see anything less than 290 to 300 million. In English, I think they're going to destroy the $250 million number, or $252 million number by almost 20%. I think they're going to crush the consensus expectation, and we'll see what happens. Very bullish in TTD. They announced phenomenal numbers back in November, so they were doing well during the COVID crisis. Um, you know, People still working from home, things like that. I think this company can do potentially well. Again, no current position for myself in TTD. That may or may not change. And if you want to know if it will change for me in a real-time setting, obviously I'll share it in the room. But for those who are not in the service, I hope to bring value to you to just share with you exactly what I'm looking at here. So here, this one I don't like as much as AMAT or TTD, but this would be sort of next down the line. It's like, how they say last but not least. This is like last and least. Even though I'm going to talk a little about MoneyGram after this, I think they're going to edge ahead of revenues here. I think the technology is going to bode well. I think this company is going to bode well. And interestingly enough, if you're not trading near all-time highs, I consider you a beaten up stock. So right over here, you could just see a weekly of Dropbox. All-time high was 43.50. And look, you're not even close to that number yet. You're at 24 and a half bucks right here. So we'll see what happens with Dropbox. On the earnings side, before I get into more of the fundamental crypto discussion and do the live ask marks, I'm going to talk a little about MoneyGram. And look, any way in which people can send others money has been a really hot thing recently. MoneyGram, they crushed. This is what I like about MoneyGram. So on their last earnings report on October 30th here, um, they announced their last earnings on October 30th. They crushed the consensus of 7 cents. They announced 16 cents. They, beat revenues by about 5% ahead of consensus. They say digital transactions accounted for 27% of all their money transactions, and they attributed their good numbers to the amazing performance of our digital business drove yet another impressive quarter as the company continues to build upon its financial growth trajectory. So, given the fact that digital transactions followed by the boom in crypto, which is not crypto is all digital, but it's also digital transactions, of course, for other currencies. To me, especially with people, MoneyGram International, especially with people being unable to leave their homes, I feel like so many more people are going to have to start relying more and more on services like MoneyGram. MoneyGram will be reporting Friday morning. By the way, on the AMAT, Dropbox, and Trade Desk, that will be Thursday after the close. And this is, of course, this Thursday coming up after the close. So that will be very interesting there as well. I've been talking to some people, a lot of my friends, whatever. Everybody's trying to get into Bitcoin now, and it's hot again. And like, I get it. Especially with the, inflation of the dollar. I, and I'm not even saying it's bad. And I'm even going to give my technical analysis, and I'm going to give you a full chart breakdown by the way of Bitcoin as well. But I just want to talk about sort of the fundamental beliefs. And I held a Newsbeat live poll, and I basically said, do you think, pretty much paraphrasing here, you know, do you think the government is happy with you using cryptocurrency or is unhappy with you using cryptocurrency? And practically every single person said they're unhappy. And this leads to you know, sort of a small policy discussion here because, from everything that I am seeing, from everything that I am reading, yeah, the government doesn't want you to create your own cryptocurrency that's unregulated. The irony is the definition of cryptocurrency literally stems from a deregulated currency. And Janet Yellen, um, basically wants to regulate it, and that is sort of the take on it. So just to show you some of the lines here, because I was just trying to Google and find out is she against cryptocurrency or not. During her confirmation hearing, Treasury nominee said that blockchain-based financial networks are a particular concern. And then she also came out and said, I think we need to look closely how to encourage their use for legitimate activities while curtailing their use for malign and illegal activities. And I find this very effing hilarious because here we have she's saying while cryptocurrencies can be used to finance terrorism and other illicit activities, they also have the potential to improve the efficiency of the financial system. The efficiency. Now, look, you might say, okay, well, what does that mean? Everybody could agree that nobody wants any funding for terrorism or illicit activities. Every single person can get on board with that. But of crypto, the whole point of crypto is to literally use it on a deregulated environment. That is why that's why Bitcoin was made in the first place. That's why it was the first big thing. So afterwards, after some people got a little frazzled, she comes out and she says she clarifies her stance on Bitcoin, promises, you have my word, effective crypto regulation. Effective crypto regulation. Do you know the only way, you know how regulation works? And look, I'm not one of those people that I'm not trying to implant how I feel on the matter. I'm just trying to show you what's happening. Come up with your own conclusion. I think Bitcoin could go higher in value. After I'm done talking about this, I'm going to talk about algorithmic support on Bitcoin and give you my levels on a pullback. That's what I'm going to do after this. But let me ask you something. You know, what do you think effective crypto regulation means other than, you know, the government literally having access to your crypto wallet? Do you think it's unfeasible? What do you think happens to somebody who has $1 million in crypto in a wallet? They forget their 12-word password. You have to remember a sentence and a half in order to retrieve your information. They drop their phone. They're sitting on the crapper. They're looking up, stocks with a little, with two bullish horns coming out of their heads and smoke coming out of their nostrils. And they drop their toilet. No, they drop their phone right in the toilet, right in the water, and their phone goes bzzz and fizzles out. But then they remember that they had all their crypto inside a wallet on their phone. And they don't remember their 12-word password. You know what happens to all their money, their crypto? Poof, gone. Now I know what some of you are saying. You might you might talk about, Mount Gox. You might say, why don't you leave it on an exchange? Why don't you leave it on an exchange? What happened with Mount Gox? Well, what happened was some people said, well, it's safer on an exchange than on my phone. I beg to differ. So just so you know, three and this was small change at the time. It's much bigger now, crypto, because of the simple value. $3 billion of crypto went missing. Missing. Untraceable, unreachable, gone. Gone. It's simply gone. Now, before you start coming to me with the BS, like you could leave it with PayPal, you could leave it with this. How many times have you seen in the past 12 months US government hacked by whatever, Microsoft hacked by whatever, Apple hacked by whatever? Are you telling me what do you think happens if PayPal, are they backing your crypto 100% in terms of replacement, immediate replacement? Are they going to come and say, well, if you left 10 Bitcoin with us, that's about $500,000 bucks. Somebody hacked into us and stole it. We're going to just replace it. I don't think it's going to be that simple. I don't even think that's even possible to guarantee, given the fact that there's a limited amount of these cryptos. Now, I know you might say, doggy coin and, what a ha 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 ha. But most of these cryptos that have any true value are limited. There's only a certain amount circulating. So, how does one promise something that is irreplaceable? You would have to get to new Bitcoin, which will never be replaced. US dollar, you could hit the print button, you could create a trillion of it, 10 trillion of it, 100 trillion of it, a quadrillion of it before anybody blinks. Before anybody blinks. You can see that very easily. So the government is basically saying one of the things that Yellen was saying was she was afraid of, you know, people using it for for terrorism or illegal activities. And one of the illegal activities was simply tax evasion. Nobody likes to talk about that word. Tax evasion. She literally brought up tax evasion as one of the malign and illegal things that people could do with cryptocurrency. So, yes, all acts of potential tyranny on this planet are always guised in the act of good. Oh, yeah, I'm against criminals and people doing this. Well, let me ask you something. What if you sold something and somebody paid you in Bitcoin? Now you have Bitcoin on your wallet, and you took that Bitcoin and you bought something else, but your Bitcoin went up in value. How do you value that exactly? How do you value the change in value? Let's say you buy a house let's say you sell a car to somebody with Bitcoin, like a $20,000 car, and with that same exact Bitcoin, it goes up in value and you buy a house. Do you realize how would that work tax wise? Would you say, for example, just to make numbers stupid, let's say you sold your car for 1 Bitcoin. Bitcoin shoots up, and later you take that same Bitcoin and you buy a house. But the house is worth a lot more. You see, what would happen before is if you own the car and you've spent $10,000 for it, and then you sold the car later, and somebody gave you, because it was a unique antique car, and they gave you $1 million for the car. Now you have $1 million, and you took that $1 million and you bought $1 million home. The government would come to you and be like, okay, you had $990,000 in gains. That's how you bought the house. But how do you do it with crypto? Uh, uh, I sold it for 1 Bitcoin and I bought something with 1 Bitcoin. Wash. How does that work exactly? So what's happening here is you are literally going to find that the government is going to want access to these exchanges. What do you think is going to happen when PayPal is holding your crypto? It's going to be regulated. They won't have a choice. What do you think is going to happen when all these other companies are holding your crypto nice, safely, and sound for you? Government's going to look at it. Now, me personally, I don't give an F if the government looks. I want them to look at everything. I'm all for it. Go ahead. Do it. Do it. But here's the irony, and that's just my opinion. You could disagree with that, and I respect you. Here's the irony. Crypto is the definition of crypto is a deregulated access. A deregulated access. So ex- explain to me how lines like like Janet Yellen will consider limiting the use of cryptocurrency. Well, how the F do you plan on doing that if it's deregulated? You can take your opinions and you could put it where the sun doesn't shine, right? So how does that work exactly? How does that work? Because blockchain-based financial networks are attractive to, and this is coming from straight from the source. They're attractive to criminals because they don't require users to identify themselves, as the law requires most conventional financial networks to do, because no individual or organization controls these networks. There's no easy way for governments to force them to comply with money laundering laws. And that's exactly it. So when all these people are getting excited, like, oh, all these, Square and Tesla is going to allow you to buy, their vehicles with cryptocurrency, and everybody's getting excited like it's a use. That's one side of the coin in which I respect and it makes sense. And I'm not saying Bitcoin won't even go higher, but all I am saying is it's coming to the point where the government's like, look, we're going to be all over it. We're going to know who has it. We're going to know where it's moving. We're going to be part of it. Or, in my opinion, good luck, because for somebody, if you're not going to keep it on one of these networks like Mount GOX, which got hacked, or PayPal, or any of these other networks which will allow you to store your cryptocurrency, they're all going to be regulated. And at the end of the day, it's sort of going to defeat its purpose in the first place, because it's literally defined. It's literally defined as a deregulated currency. Okay. So what I'm going to do now is I'm just going to show you where I think support is for Bitcoin US dollars, because again, I can definitely see, the hype in crypto going up. You're literally right underneath $50,000 at the moment on this crypto, Bitcoin. And interestingly enough, with the charts here, depending on when it hits, I see support, and again, depending on where it hits into the low $42,000 range, I could see Bitcoin dropping to 42,500. Maybe it goes to 50 first. It's literally, closer to 50 than it is, 42 and a half. But I could see this going to 42 and a half before potentially getting more of a scalp bounce. Long term, there are just too many fundamental flaws with it. And I'm not saying you should or should not own it. All I am saying is if your purpose is to have a deregularized currency, good luck, because the only place you'll be able to store it is on a phone that doesn't have access to the internet or a flash drive. How would you transfer it then? You're playing with fire when you own cryptocurrency. You're playing with fire. You want to use it as a speculative instrument. You want to use it because you think you can make some money. You want to use it because you think it's hot. Do whatever you want. But at the end of the day, I am telling you right now, from everything that I am seeing in front of me and just using the words of the federal chairman herself, there's going to be regulation all over this. It's going to be impossible to not regulate. Imagine this. Somebody makes $1 million. And I'll give you my last thoughts on it, and then we're going to go right into the live unfiltered questions. I don't know what's going to be asked, but we're going to go right to it. I'll leave you with this one thought right here. And by the way, and I showed you, she's promising regulation, unless you think she's lying, which I don't see any reason for her to lie. Um, Somebody makes $1 million. They convert it all to Bitcoin. I'm going to make it up. Let's say Bitcoin is $50,000, right? So they have 20 Bitcoin, right? They have 20 Bitcoin. It's you know, person, you know, netted $1 million. They now have made $1 million, converted to 20 BTC. They bought 20 Bitcoin at 50,000 a pop. Now what happens? Now what happens is one of two things. Goes up or down. Let's say nobody hacks him or nobody hacks the exchange and steals it from him. It's happened before. Hackers didn't get stupider since the last time it happened. I don't think Bitcoin got much safer since last time it happened. It's blockchain, and the irony is the protection is built into it already. Anyway, this is what happens to Bitcoin. So now Bitcoin, just to make a thing, BTC equals 50 grand. Okay? 1 BTC equals 50 grand. Now what happens is BTC goes down to 25 grand. I mean, you guys aren't crazy enough to think like that there's zero chance of that happening, right? Like, I'm not coming here making up tall tales, am I? Just to give you an example, on January 8th, Bitcoin was trading as high as $40,000. And just so we're clear, I am using the BitBay exchange. So I'm sure different exchanges have different numbers, but it's all the same shit. Let's, similarly speaking. Okay. So it's $40,000. It was $40,000 also on January 9th, right? $40,000 on January 9th. 3 days later, three, 72 hours later, after being at $40,000, Bitcoin hits $23,543. It drops $16,500 or 40% in 3 days. So just to show you, it is volatile. And I'm not coming out of left field here making up some crazy tall tale. Okay. Bitcoin goes to $25,000. So immediately, guy's down 500 grand. He has negative $500,000, right? His million dollar investment has dropped. It's down half a mil. Okay. What that person does is on December 31st, right before the year ends, he sells all his Bitcoin, locks in the negative $500,000 loss. Literally the next day, let's pretend it didn't move that much. It could have moved up or down a little. Literally the next, F it. I'm sorry, not even the next day. On December 31st, 11:59 p.m. and 50 seconds, he sells his Bitcoin. 10 seconds later, the new day comes, the new year, happy new year. He buys it back. So not even full 24 hours. We're talking seconds. Locks in the $500,000 loss. Boom, I'm right back in. Like that. That's how quick it happens. Locks in the $500 loss. Buys it right back. Now you might be saying, well, what does that mean? Well, when he pays his taxes, he'll be paying taxes on $500,000. Yet his investment never changed. He just used it to shelter the taxes he has to pay or she has to pay. See, there are a lot of holes here. And let's say next year Bitcoin shoots up to $500,000 a coin. Let's say one Bitcoin next year after he does this equals $500,000. Okay. So now the dude is up. He's like, oh my, and again, I'm not a tax, so I'm not a tax accountant by any stretch of the imagination. So don't take this as tax advice. I'm asking a question here. So then Bitcoin is worth $500,000, and now all of a sudden he's worth $10 million. Uh-oh. Uh-oh. So what he does at that point, he starts investing in real estate, rental properties, dumps all the money in there. And what you have at the end of the day is a cycle that goes on indefinitely. Does that make sense? Okay. I guess you could buy. Can you buy the house in Bitcoin? Maybe by then. Let's take live questions. Pavo, we're going to start off with you today, sir. What is your questions? Have your questions lined up. We'll go to them. Pavo, you first, followed by Gambler. Either one of you can put in your questions now. Otherwise, we're just going to get to an emailed question. All right, so Pavo's asking, how can I break out of the 4357 paradigm? So, so basically what Pavo is asking is he's stuck in what I call the 4357 paradigm. And what the 4357 paradigm is it's what, in my opinion, plagues most traders, because most traders are stuck in this place where they're making money about half the time, or between a little less than half or a little more than half, and they're not really making money. They're grinding the wheels. They have up days, down days, but they're not getting anywhere. Their accounts could be slowly bleeding down or up a little or flattish, and they don't know how to break out of that. So the geniuses over at Wall Street, well, the gurus in my position, they said, well, the only way to break out of that is it's impossible to not bat that. You have to bat approximately 50%, but you need to make a lot more on your winners than your losers. And mathematically, that is very sound. That is a very sound process mathematically to get to that point. But the problem the problem with this is, of course, what makes sense mathematically does not make sense psychologically. And psychologically is the most important aspect of trading. So going to Common and Tversky's loss aversion principle, um, you know, people should avoid lotteries, they call them. I'll call them trades because they're saying lotteries, which give a 50-50 chance for gains and losses. No lottery does that, but the way in my interpretation is people should avoid trades which give a 50-50 chance for gains and losses because the negative repercussions weigh heavier than the positive ones. According to Kahneman and Tversky's loss aversion principle, this is 2.5 times, 2.5 times worse. So meaning, you might say, well, in order to break even psychologically, I need to make 2.5 when I'm right and lose 1 when I'm wrong. Yes, but the problem is if you break even psychologically, you'll never grow as a trader. And the problem is you're going to be having such long lines of suffering that to even climb out of it is going to be hard because you're not a robot. The best way to climb out of that is to literally go back to one thing you do well. Take a trade, take a chart, show the candlestick, show how many digestive candles you need, come with the strategy and say, this is what I do best, and only do it from there before you move on to anything else. That is my take on it. That's how I break out of it. I know, you know, I know it might sound like a broken drum. For me personally, it would be the Mark 1 strategy, a strategy I share for free with you guys that I apply. Um, if I was stuck in this situation, that's what I would do nonstop. All right. Um, so Gambler is asking about a platform here, and Cliff, you can go ahead and ask your question now, sir. Melnick, where were you considering not using Street Smart Edge anymore? No, I wasn't considering that. You had mentioning you were mirroring SSC with another platform. I wouldn't say, I mean, yes, I am looking at another platform. I would like to use another platform right now, and I would like to use another platform right now, and that's about it. So I just want to, I am considering it. I am going to guinea pig myself through it and make sure it's good before I put my stamp on approval on anything, because I'm not an effing tool bag who just puts their name on anything because it pays. But I'll put myself through the gauntlet first before I recommend it to anyone. Cliff, you're saying you asked in an email. All right, so let me get to your email. All right, gotcha. All right, next. Hi, Mark. Last March, I did not have a lot of capital during the crash, so I didn't get into any long-term stock holdings. Now the market is where it is, and I have extra cash now from doing all the day trades and scalps. I feel I'm losing value just having cash sitting there, and I would like to buy into some stock for long-term holding. I'm basically accumulating a lot of cash from scalping and day trading every day. I've just been buying flesh and blood boxes regularly, but I can't just use all my cash and buy flesh and blood, right? I can't legally tell you to buy anything. I'm saving up for a house rather quickly, but not enough yet. While I'm getting there, I'm thinking about buying some stock so I can just hold it. The traditional way of investing into stocks is just put a set amount of dollars every week or month into a stock you like, regardless of where the price is. Well, that all is nice and stuff for people that don't trade, but I'm a trader and hopefully I can get in at a good low price and just hold versus just randomly buying in at any price. I'm thinking that the next time there is a big dip, I'll have capital to go in on some stocks or Qs or spiders, but I'm assuming that's not happening anytime soon. Why? Why would you assume that's not happening anytime soon? My thoughts: never predict where the market should go. Let it do whatever it does. By actually saying you're assuming it's not happening, you're actually already assuming that you're going to go up higher and higher from here, which I personally believe but that's a toxic thought. But if it does happen, well, you let us know that's the bottom of the market like you did back in March. So you want me to get to the point where I could. All right, so when I called the bottom of the stock market back in March of last year, you want to see if I could do that again this year. I mean, maybe I'm not always right. I'm pretty consistent with being correct, but I'm wrong as well, in all fairness. Um, it would be a lot easier, I think, if you're looking to swing. Again, I can't tell you to buy or sell anything, but I don't know. Maybe I can, maybe I can't. We're just, you have to understand the market is under manipulated policy now after the whole COVID thing. We're in a different bull market than we've ever been in ever. Nobody likes to talk about that. We're in a bull market where if shit hits the fan, as they say, we're just going to print trillions of dollars and, you know, pump up the volume. If the market goes 45 degrees up for the next year, am I just not going to be in long-term stocks, or do I just go into next time the spiders or Qs hits the 21 55 or 100 EMA or 200 SMA? How do male day traders like us even hold long-term stocks without selling the day, week, month, or small, medium-term profits? I'm just going to share with you my thoughts here. I mean, you're basically you're asking a very intelligent and a very loaded question. The intelligent question is, how do I get inside for a long term when we're so high now? Are we going to just keep going up forever? And I'm afraid if we go up again on a 45-degree angle, I won't be part of it. So do I just buy with this? So you're making an assumption that the market's going to keep going up, and you're making an assumption that when we pull back to these longer term or shorter term, however your time frame works, moving averages, do I just go ahead and jump in and buy the market? And for me, I'd rather buy something I believe in. It's for me for something I believe in. So things I believe in everything. Everything is speculative. I don't give a shit what people call safe money. It's all bullshit. So you're telling me like buying a treasury bond is safe because they will pay you that percent per year. Yeah, but are you going to be outpacing inflation? Seems, an interesting question. Anytime you put your money in something, the way I see it is you're going to lose 100%, and you have to sort of go in with that mentality. Otherwise, you'll never be comfortable. After that, your problem is you've been accumulating too much cash. I know. What a problem, bro. But it's a legitimate concern, and a lot of Newsbeat Live members have been coming to me with this problem, where they're making so much money now that they just don't know what the f to do with it, and they're afraid to just dump it in the market here, or when do they dump it in the market? My thoughts is buy something you believe in. If you're going to put your money towards anything, I can't tell you what to do or buy, but if I was doing it, I would buy something I believe in. Buy something that you say, you know what? I want to pass this down to my children. I want to hold this for the long term. I'll be comfortable 20 years from now holding this. And for some people, that's stocks. For me, it happens to be cardboard. I love, Flesh and Blood and Magic the Gathering, and some of these returns have made the stock market move look like a joke. Some of these moves have made the entire stock market look like a joke. So, you know, you could always take care of important things in your life. I was considering maybe opening up a real estate business and buying like rental properties and things like that and real estate with some of the money that I've been making. There's no hindsight will be 2020 on your answers. For myself personally, I would rather own something I'm comfortable with. If I own a house across the street, it's a house. I'm sort of comfortable even if it drops 25% in value. Would you be comfortable holding a stock you like if it dropped 25% in value? Would you be comfortable holding a Flesh and Blood product if it dropped 25% in value? A Magic the Gathering product or a gold bar, a silver bar if it dropped 25% in value? Antique wine bottles, like old, expensive, like that's a collector's item. That's the question I think it really comes down to is your own personal comfort level. And for me, like I'm like little people don't really I rarely talk about it. People make assumptions, I'm sure. I'm not involved in the market. What, Mark? Let me explain. My kids are. My kids are involved in the market. I'm not holding any long-term swing positions. I own zero of them. My kids do. Well, do I own them since I have a 2-year-old? Can he really own something? Yes. Does he know what it is? No. I don't own one. I'm all right. So I have a couple overnight positions. I'm going to share them with you right now. But like long, 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 long term right now, I own nothing in terms of the stock market. Personally, like under my name, I own nothing. Nothing. And people might find that like surprising. How many of you guys are surprised at that right now? Just curious. Like that I don't have any. I mean, I have overnights in Tesla and Amazon, and I'm going to go over on that. Eddie's Not even surprised at all. Rose is not surprised. Smart. Oh, no, yep. Nobody, people are not surprised. People are not surprised. My weakness is I don't give an F about staying up at night, looking at a position, looking at this, looking at that. I don't want to do that. It's too unhealthy for me. I'd much rather come in I'd much rather come in a year of trading, you know, try to make 20, 30 million and like get the F out and not really care where the market goes. I would much rather be in that hypothetical situation than a hypothetical situation of I'm holding uh, Apple and I'm holding Netflix and I'm holding all these names and they're all going up and I'm sitting there looking at them every night like this. I'd rather not do that. Okay, hypothetically speaking, right? So for me, definitely, you know yourself. What was it from? Do any of? Oh my God, I just literally rewatched The Matrix. Every time I rewatch The Matrix, you always learn something new. So, and The Matrix, have you guys watched The Matrix? Have you guys watched The Matrix? So inside the Matrix, there's inside the Oracle's house, there's a wooden plaque above the door, like when Neo walks in, and there's on top of that door, there's this thing that says, I don't know how to pronounce it, Temet Nosce, which literally means know thyself in Latin. It's in the Oracle's kitchen, and it's what Neo has to do to save his mentor's life and become the one and save his own. He has to know thyself. So you know what's funny about this? Because I was thinking about it and the trading aspect and whatnot, the know thyself thing. It's literally what you have to do to become a successful trader. It's very important. And unfortunately, we live we're in an industry right now and you want to know why like this is your problem email over here, Cliff, that you're making money, you don't know what to do is because you discovered yourself. You have to discover more of yourself. The problem again in Wall Street is it's not know thyself, it's like know the scumbag guru in which you're swiping your credit card to follow. Because once you know them, then you're going to follow. And knowing yourself is irrelevant. You're either a swing trader, an overnight trader, and you give yourself a classy little two-liner of who you are, and then 98% of you fail. And you're like, how the hell did that happen? That's why the reason why I find success here. And there, of course, you have Neo. This is Neo walking out of the Oracle's kitchen with the wooden thing from the Matrix above. It says Temet Nosce, which is know thyself in Latin. And that's one of the most important things for you as a human being is to know thyself. It's not about what I do. It's only about what you do and what you do best. And that is, appreciate that, Rose. Nice one. Rose is saying, the full quote from antiquity is know thyself, and thou shalt know the universe and God. Awesome, awesome line. Good one, Rose. But this is, ultimately, this is what people want. People are always looking for success in the market by trying to know others. Oh, let's see what Guru XYZ does. Wow, they're flashing big numbers. I want to know that. I want to know him. I want to know her. When the truth is, your success is knowing yourself. And that might sound vague to you. Like, oh, how does one know himself? Where do I go? Come here. There's links in the description. I will show you how to go on that journey to really know yourself and succeed. And then you're going to be producing numbers in which you never dreamed possible, potentially. Potentially. I think your odds are higher of achieving that in my service than elsewhere. That's just my opinion. Make up your own judgments and due diligence. Make up your own judgments and due diligence. I don't need this effing job. I don't. I do it for the charities. I do it for good causes. I don't need to be here on this mic right now talking to any one of you. I don't. I could just trade, sit in my underwear, wearing pants, sit in my underwear and a t-shirt and just trade my shit and do my thing. Don't have to answer to anyone, you know? Don't have to do anything. But I want to help you. I do have to do it morally speaking. I do feel sort of, it sounds kind of effed up, like a repenting gratitude towards others. It wasn't like that. I used to do it just for the paycheck, just so we're clear. I'm not trying to pat myself on the back. But like now it transformed into sort of like a repenting good to help others succeed. So my take on it is I'm not going to bullshit. I'm not going to smile in your face and throw 10 names at you like a schmuck who destroys the lives of 90% plus of the people around him. That's how do you sleep well at night doing that shit? And I guess that's where I've gotten to the point of your success and knowing yourself. And that's really what trading is about. What I try to do is I try to improve things you do outside of trading. I try to improve your life. I try to improve organic foods, organic coffees, keeping positive things around you, keep pictures of things that make you smile, eliminate things that make you sad or bring up negative emotions. Because only once you remove that cloud, that fog, it's literally a type of fog of war that is clouding your judgment. You remove all these negative aspects and things around you. Only then, ladies and gentlemen, can you truly know yourself. Matthew, you are up, my brother. You have anything you would like to share with us? Why is it that a large ask is bullish? All right. Why is it? Just hold that question there, YOLO. You only live once, but I only want to read your question once. Okay. Um, so, uh, so, so Matt's asking, why is that a large ask is bullish? All right. It's not always bullish. It's situational, and I'll show you the situation in which it is. So let's say you see a bull flag. Everybody can feel this chart here. It's like, ooh, this is really nice. Oh my God. Oh God, I can't wait to buy that. And I know what some of you are thinking, with this made up chart, you got a little falling wedge right there. Things are beautiful. Things are looking nice, right? Now, let's say you're looking to buy the breakout here, and there's a large ask right here. There's a large ask. Large ask. You thought I said large ass, right? No, large ask. Large ask. Um, Large asses are a thing of beauty these days, and they are worshipped by many. So let's say you see a large ask over there, and you see a large ask over there, and the stock's going up, and you're thinking, well, how does this work over here? Let me just do this just for the sakes of volume. How do you work it? Well, let's say you look at the volume bars here. Your volume bar is high, 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 and then on the red volume bars you get low, low, low. Well, what happens here on this green bar right over here as it's going up, the thing you need for a bull flag continuation pattern to continue up is high volume. So if you have a large ask over here, the high volume will be there for you to potentially go like this. And yes, I'm giving you a very positive outcome. And you need this volume bar down here to be high. So if a stock is showing you a large ask at that point, it's being interpreted bullishly because that's what's needed for a bull flag continuation pattern. You wouldn't be able to shoot up like that on low volume, as a generalization, of course. Does that make sense? Let's go, YOLO. You only live once, bro. You need more volume to break out, and that offer gives us the volume. Exactly, Cliff. Uh, YOLO. Let's see what you have to say, YOLO. Mark, I think silver has been artificially kept low by hedge funds for years. I don't even think that's an opinion. I don't even think it's a thought. I think it's a fact. But what do I know? In comparison to other precious metals like gold and platinum, above ground there is 8 times more gold than silver. Is that really true? I'm not sure I believe that. I'm not sure I believe those numbers. I hear what you're saying. A lot of the silver is in the ocean. They have to blow it up to. I understand. I'm on top. I understand the process and everything, just so we're clear. So you're saying above ground, there's 8 times more gold than silver. And with the rise of new technologies, the demand of the industrial silver might explode in the near future for stuff like photovoltaic panels, electric vehicles. There's a new subreddit group on Reddit for silver with 25,000 members called Wall Street Silver, where people post pictures of them stacking silver. Oh my God. Okay. So what is your question exactly? Can you like not uh, since your name is YOLO, I'm just gonna copy everything you're saying. All right. All right. The word is keep stacking and buying physical silver to squeeze paper silver stocks like SLV and PSLV. Oh, so they're trying to manipulate the market by publicly saying that you should buy it to squeeze these things. Interesting. I think short term, we will see a shortage of retail and industrial silver. It's currently happening in London. With this current hyperinflation and the rush to own real money, physical silver, and gold, I wouldn't be surprised to see, in parallel, a correction of the market, rise of precious metals, and Bitcoin. On the February 3rd, the day after the huge 3-day inflows into silver, and the addition of and in the addition of 3,000 tons, the iShares Silver Trust changed its prospectus, adding in some paragraphs including oh, did it? The demand for silver may temporarily exceed available supply. That is acceptable for delivery to the trust. It is possible that authorized participants may be unable to acquire sufficient silver that is acceptable for delivery to the trust. Yeah. Furthermore, Goldman Sachs Jeff Curry admits SLV money. SLV money is used to buy shorts on COMEX futures. In other words, Jeff Curry just admitted that ETFs like silver are shorting silver versus just buying silver and storing it in a vault. He literally said for every share of SLV that is purchased, we are going to short that amount on COMEX. This is a total fooling of silver investors, but with all of that, would you mind sharing your thoughts about silver in general and a possible squeeze in silver? All right, I think it's kind of I think this whole situation is effed up. I think it's wrong for people to come out and say, let's buy physical silver so we could squeeze it. I'm not for that. I'm not for people coming out now and saying that. With everything I know now in life, I am not for that. I am not for that. Also, I'm not I'm not for a-holes like the person you just named shorting one thing of COMEX for every silver thing and silver changing their prospectus and whatnot so people could remain short. And I'm also not for the exchanges raising margin requirements on silver to help these douchebag hedge funds to remain short silver. So I'm against the whole thing. I'm against what the Wall Street bet people are doing. I'm against what that Goldman Sachs guy is doing. I'm against what the hedge funds are doing. I'm against it all. Whatever happened to free market? Whatever happened to stop putting confines and restraints around people to benefit someone else? You know, I want to buy stock. Let's say, to make shit up, I bought stock ABC, like AmerisourceBergen, but I'm more, you know, looking at it as the letters ABC. And I simply said right here, okay, let's put out a rule that nobody can buy ABC or more than 1 or 5 shares of ABC, similar to GameStop. Let's make a new rule. And we'll guise it under some market bullshit like, oh, well, we want to protect our investors. So you want to protect your investors so you're not letting them buy something. Cool. Okay. So nobody can buy ABC. Let's say it goes up to $200, whatever. I really don't care. I know percentage wise GameStop went up more. Let's say it goes up to $200. No, nobody can buy it. Can I load in a short position before you come out with that news? That's what these hedge funds basically have access to. And no, it doesn't make it right that a bunch of people on a Reddit forum are like, buy all the physical silver and squeeze it. They want to buy physical silver because they believe in physical silver. Fine. I will say that is one of the things that I do not understand. I do not understand why silver isn't 10 times higher just based on its usefulness. Forget about all the bullshit with the Wall Street bets and the bullshit scumbag firms who are shorting it, trying to intentionally artificially hold it lower, knowing that they have control over and they have sway in the industry to tell the regulators what to do. Effing scumbags. I think the whole situation is wrong. Wrong. The small person is wrong. The large person is wrong. The in between is wrong. Buy silver if you believe in silver. Buy silver if you believe in silver. You like silver? I believe in it fundamentally. I think it's so much more important than gold. In my opinion. Disagree with me. Why don't we start and say it's an antimicrobial? I was actually thinking of, I don't know where silver is right now after hours. I was actually considering overnighting it, but then I was like, I don't even want to deal with this bullshit right now with everything happening with the Wall Street bet names. So I ended up actually buying Tesla and whatnot, and I'll go through those. Tesla and Amazon were the two names I bought on Friday. But just to highlight what's happening here, I can't wrap my head around this. Now, I really don't give a shit about Silver Trust ETF. That's all bullshit. This is all bullshit. I don't know. Like physical silver, though, I don't see any reason why it's not trading 10 or 20 times higher than it is right now with what has happened in the world. These things are being valued in US dollars, everything inflated, and silver and US dollars, silver and gold cannot get any movement. And by any movement, I mean like, look at the all-time high in GLD. All right, it was made at 194, so GLD is held up, but look at SLV. I'll move my head, sorry. So here's GLD. Look at SLV this is a yearly chart. I mean, SLV was at $48.35 in 2011. So again, I don't really consider this owning silver. For me personally, this is not owning silver. This is owning some manipulated bullshit company which people and hedge funds are using to manipulate to make money. That's SLV to me. But at the same time, who knows? Maybe it goes up in value, right? That's all people care about these days. All right. Geronimo. And look, and by no means am I saying like that I completely believe in silver. I'm just against everyone trying to butt heads with each other and do scumbag things. I have a question for you, Mark. Perma-Bear Harry Dent postulated this month that a deflationary crash could possibly cause a liquidity crisis that will limit brokerage margins to institutional investors only. Do you think there's any validity to this theory? A deflationary crash. All right. I don't claim to have scored 800 on the verbal section of my SAT, nor do I claim to own a master's in English and interpretation. Also, I don't claim to be part of a drug cartel, but I do not know what kind of crack this guy is snorting or injecting through his brains. Where the F do you get the word? How the F do you come up with the word deflationary crash? Explain. I have to look it up because I don't get like a what? Bro, do you want me to? No, don't share that stuff with me. I don't even want to go near that stuff. All right, so let's look up what a deflationary crash is because I'm having stupid in my head and I'm trying to figure this out. So, when the burden becomes too great for the economy to support, defaults rise. That's true. Moreover, fear of defaults prompts creditors to reduce lending even further. That is true. The resulting cascade of debt liquidation causes a deflationary crash. Right, debt liquidation. Now I get it. I still think he's a crackhead, but not putting Harry Dent down. I'm sure he's famous and probably has a lot more money than me, but I'm not here to impose my will on you. If you want to smoke crack, that's your prerogative. I'm against it. I'm not here to enforce and impose my will upon you. Here's the problem, Harry Dent. I hear what you're saying. I hear what you're saying, bro. And let's take a look at what could cause this deflationary crash. 27.9 trillion. Do you think on a politically divided America where people don't look at each other, unfortunately, anymore, that you voted Democrat, you voted Republican, you're somebody who is making bullshit up and pretending like you're in the middle. Okay, fine. You're one of those three people. What would happen if we had a deflationary crash, politically speaking? What are the odds in 4 years that you can actually get with a deflationary crash in the current environment? What would the odds be if it happened now? That, and I'm not getting political at all, I'm just being real and just sharing you my opinion. You could disagree. What are the odds that a Democrat would get elected in 4 years for the presidency if we had a deflationary crash, the market imploded upon itself, we went into bear market? That would be the closest thing to zero I've ever heard of in my life. And if it happened under a Republican president, it would be the closest thing to zero that I've ever heard in my entire life. Because you would lose the faith of the public. Now, here's the where he makes sense. Looking at this national debt, we're at the point of no return. You cannot solve this debt. You cannot solve this debt on the trajectory and where we are. We don't produce enough money to pay off the interest right now. Meaning this number that's going up with everything the United States produces, everything, if 100% of that money went to this, we could not lower this number. But there is a way. There's two ways to lower the number. And again, I'm not an economist, it's just my 2 cents. The way you lower this number is one of two ways. First one is exactly what Harry Dent is saying. A deflationary crash would cause a liquidity crisis. All these things go belly up. We can't pay you back. Blah, 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 blah. Everything crashes and burns to hell. That can happen. Sure. Now, it would limit brokerage margins to institutional investors only. that's a deep assumption when the whole market's going to shit that they're going to still allow some people go to margin. I mean, be some interesting lawsuits going on. I'll tell you that from people who've owned margin accounts for a long time. Good luck having every single person not stand up and, burn, hang, and string and quarter all these institutional investors. But hey, I'm not violent. I wouldn't do that. I'm just talking about more of the mentality behind it, of course, jokingly. We're not going to execute the medieval style, but you're going to be people upset, is my point, right? Is there any validity to this theory? Yeah, but here's why he's on crack. There's validity because we could just say, look, we can't pay it off. Sorry, China. Sorry, Japan. Sorry, every single country who owns U.S. debt. Sorry, guys. And that's Canada, Mexico. I mean, we're talking everywhere owns U.S. debt. There's literally a pie chart that literally says, you type in on Google who owns U.S. debt. I'll show you. It's like you could just literally get like pie charts over here where it's like, all right, China owns this much, Japan this much, Hong Kong, Singapore, Korea, Belgium, Luxembourg, Ireland, blah 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 blah. Everybody owns U.S. debt. So if we just came and defaulted on it and say, sorry guys, can't pay you back. The amount of selling that would happen would be astronomical. We would literally go into a financial depression overnight. Now, it's viable because this shit can't last forever, and sorry if people are delusional enough to think that. I got a more eloquent solution, in my opinion, before the let the world burn to hell bullshit. Because here's the problem with Harry Dent's theory. Nobody wants this to happen. Well, that doesn't mean it won't happen. That's probably exactly what it does mean, actually. And we're going to explain that. Because at this point, you know, if we did that on all our debt, I mean, we are talking about wiping out $30 trillion. It's saying it's over. um, Let me give you a more likely scenario, which is actually following the trajectory now of every single president on both sides of the table. We are just going to keep printing F tons of money. Now, what I think the government should do before they would even, what I think they would do before, and again, I'm not an economist, I'm a realist, before they would ever say, you know what, we're not paying you back, why wouldn't they just go and print $50 trillion with one click of a button? Yeah, your gas prices, milk prices, housing prices, flesh and blood prices, everything that can't be replicated prices will be going up through the ceiling. Housing prices, but we would pay off our debt overnight. It would disappear. Oh no, where are we going to come up with $28 trillion? Click. Oh, here, let us pay you all back in full. F you, we don't want your money anymore. We paid you back in full. And all that money, the buying power is not going to be able to get them as much as it could before. You'd probably see your house go up 10 times in value. You probably see milk cost $10, $15 a gallon, if it were to happen dramatically overnight like that. I don't see any of those scenarios happening, just so we're clear. I'm just giving you both sides of the table. What is likely going to happen, in my opinion, is we're going to keep doing $1 trillion stimulus packages, 2 trillion, 3 trillion, 2 trillion, 3 trillion, 2 trillion, 3 trillion, because right now, policy, ladies and gentlemen, U.S. policy is no longer built on what is best for the American people. We try to achieve those results on what's best for the American people. This policy is simply based on how do we make ourselves look good for you next time? And the policy is going to be built with that in mind, because not many people are going to wrap their heads around inflationary measures and price spikes. And yeah, naturally things go up. $100 today is not worth as much as $100 10 years ago, or 20 years ago, or 30 years ago. I get that. But, Harvey Dent thing is basically he's predicting, well, America's just going to cash out to the world and everything's going to collapse. Grow the F up, Harvey Dent. Seriously, just grow the F up. I hear what you're saying, and and I can understand why you would think that, but shut the F up. Just seriously, shut the F up. You're entitled to your opinion. I respect your thoughts to have that opinion. I respect what you're saying, and I will fight to the death for you to be able to share that opinion. But at the same time, on my end, my opinion is that you should shut the F up, because what you're doing is delusional, fear mongering. You think somebody working with a 30, 40, 50, 60, 70, 80, 90, $100,000 a year job wants to sit here and read that bullshit that all the money that they're working and slaving over is going to be disappear, deflate, and worth nothing? You think they have time to sit there and listen to that nonsense? That's my thought. Any other questions? Guy? You're up, Guy. All right, maybe I'll scroll up and find you. Let's see. All right, I found you, Guy. You're a good guy. Don't worry about it. When you pick the morning levels, if one or both are based on a trend line, how do you decide which line you're going to use and why? Usually the one that's closest. Is it the longest time past or untested line? Basically, I give credence to all my lines. As a generalization, I'd give the one closest. The most recent on the daily chart, there must be a specific reason you call them when you do. Please give an example. So just for example, like on the triple Qs, and you might see, oh, look, there are all these trend lines and whatnot. For me, like, what should I use here? Should I use this trend line right here? Should I use that one? Should I use that one? Generally, I use the one that's closest. And on the resistance lines, I'll generally use the one that's closest. So, as opposed to anything else, I'd rather some of these just no need for anymore. I could probably redraw a lot of them. But that's generally how I go about it. The one that's closest. So yeah, so like for example, I bought Tesla options on Friday. Again, if you're in the room, you get our overnight trades for free. And just like it, coming off support, bottom of the Bollinger Band, leaning up, closing on a strong hammer. I think there's a very good chance we gap up on Tesla tomorrow. I also bought Amazon. And again, if the market's down huge, obviously anything can happen. I like Amazon fighting back over the 21 moving average right here. Look, why these lines are so important, because it gives you the ability to call the dead bottom of Amazon, the dead bottom of Amazon in that example. And you might say, why are these, trend lines important, for example? I'll just share with you this. I'll share with you this. So these were the levels we gave you on February 11th. So I always give the day ahead. So when I do tonight's levels, it's going to be for February 16th, tomorrow. So just for example, I bought Amazon. So just to show you an algo line, this is the level of algorithmic support I gave you for Amazon. $3,236.65. Again, this is available for free for members of our service. And you could see That level broke on Amazon, and Amazon hit a low of 32, 33, 31. In English, Amazon literally broke like $3.34 underneath my support level, which for a $3,000 name is nothing. So it broke, you know, $3 below my support level. You know, that's why, algorithmic lines are an important thing. And another thing is like, just to show you if I can here. Hopefully I can. It's a 1 minute chart of Amazon from Friday. Just go ahead and pull it up right here. And what you'll notice is the way you know you're drawing a support line, this is why all these bullshit artists in the industry have no effing clue how to draw a support line, because you could always backtest it. So if anyone gives you a level and there's no explosion of volume at that level, the line is bullshit. So for example, I gave you the level just to go back and just to show you the power of drawing them correctly. $3,236.65 I gave you in English. My support lines are important because if that level hits in a real time basis, you're going to see an explosion of volume. So what I'm saying is on that Amazon call I bought, if I don't see an explosion of volume, whether I'm right or wrong, it's a bullshit trend line. I mean, I know I'm right because I see the predictive analysis. I can predict it with almost 100% certainty when you have volume spikes. So for example, on Amazon on Friday, here is the point right over here where it broke $3,236.65 for the first time. And you'll notice, look at the volume spike. Exactly. This is a 1 minute chart, Amazon from Friday in real time. And that's very uncoincidentally for me of where, why it bottomed over there for the entire day on that 1 minute chart. And, this is where it was just zooming out here right over here, and you got that volume elevation. I proved it on a 1 minute. Um, you know, bottoms out for the day and just literally kept running up afterwards. Look at that. It's almost magical for some of you guys. Like, wow, that's that's how you use the trend line effectively. Um, hope that answers your question already then. Oh yeah. And then there's the truth about our global debt. Yep. The unfunded promises. So if you actually want to know what our true debt is, and I don't think anyone can deny this, you'll notice that our unpublished debt is at 27.9 trillion, but the truth is we're at 139 trillion in debt, which is about $906,000 for each taxpayer. Unfunded Medicare promises, unfunded Social Security promises, publicly held debt. When they say unfunded, like Social Security promises, like understand this is what we promise to give back to the US citizen. There's no like huge Scrooge McDuck vault. There's no huge Scrooge McDuck vault with gold coins in which we're holding on the side to pay these people the money. So just yeah, it's an excellent site. Absolutely. It's posted in chat, Guy. You can scroll up. Joe posted it. Let's see. Hi, Mark. Is there a specific setting in SSE ensuring that the default option call will be the closest expiration and near strike price as you prefer it to be? Yes. You just literally right click on the level 2 box and you hit settings and you should be able to find it. Yeah, so the Amazon wasn't an official, it's an overnight strategy. None of my C strategies imply overnights, but yeah, it was based off an algorithm. It was based off those factors as well. Source. Kevin, I was wondering since the trades in the C strategies play on the spike of volatility, can it be concluded that higher volatility stocks would do better with these C strategies? Sure. in terms of do better, I mean, yeah, I mean, have you seen the names I focus in? I'm not one of those scam gurus who every name I focus on are these small cap names with nice charts, you know, just try to pump it to a room. Do you know any scammy people like that? So yeah, here are the 9 charts I was watching on Friday. Tesla, Amazon, PayPal, Disney, Zoom, Nvidia, Squares, the spiders, and the Qs. Exactly. Things that can move outside the spiders and the Qs, which can move, but those are just more reference indicators. Those other names, well, you see what they do. So yes, absolutely. Chase, you can ask a question via email. Go ahead. Did you send me an email? I'll read your email. Mark, your past color on exiting an options news play with a limit was super helpful. There's only one less thing I lack that you believe you lack. I feel like I say that because you're always evolving and changing, so never think like, oh, that's all I needed. Maybe all you need to get to a level now where you can make money, but not all you need for the future. You see, all right, anyway, like one of these. All right. I feel like I'm always exiting these plays too early. Perhaps this is due to me seeing so many of these pop and drop super fast over the years, which has thus put an erroneous idea in my head. Maybe. Many times I will enter very quickly at the market and then stock ticks down a bit right after the entry, then I mark it out. Then it proceeds to finally pop huge, and it turns out I was just too early getting the news and it just simply hadn't hit the market yet. Well, that's the thing, with news flow. you know you try to get it. You don't know when it's going to be fully disseminated everywhere. Certain services are slower, certain ones are faster. On certain times they'll be slower and faster. That's why it's important, in my opinion, to use several services and be able to not have your head spin in 30 directions in order to interpret it as early as possible. But I hope I bring that value to you. So I was just hoping you could discuss what you personally are looking at after entering a news play to know it is time to place your limit exit. Are you staring at the stock level 2 or the options level 2 or the chart? Rarely the chart. The stock level 2 and option level 2, sure. Are they spreading out a lot? What is the news? Is it like just making some bullshit up? Candy signed a test agreement with the DMV of Ohio for testing electric vehicles, making this shit up. Or is it Candy is opening up 100 stores in the United States and will be beginning selling their electric vehicles by mid 2021? And something like that would stand out a lot more to me than the first news. Then I might hold it a little longer. I might try to limit out. I might try to think that people might get more excited about that than something else. You're asking that is my answer. So in English, it depends. Depends. And hopefully, my interpretation of conviction, I try to portray to you where I am in the situation, conviction wise, and hopefully that's value to you. Okay. I don't regularly trade the Qs or spiders. Sometimes I do. I use them more as a generalization for reference points. Uh, yeah, I did answer your email, Matt, but let's do it again because I deleted it, and I only delete emails that I answer, and then you resent it. So that's how I know I did it. Hi, Mark. Fourth week in the room, and I'm loving every minute of it. So grateful for you and the Newsbeat family. Will you please talk about how you call out the triggers and how it relates to level 2? Um, I have a video somewhere on A plus triggers. You should probably watch it. Does anyone have that video for Matthew to share? How it relates to level two is just the numbers of where the stock is. The trigger is the trigger. When it hits it, it'll also hit it on the level two or without the level two. Stock will hit it and it can move, potentially elevate in volume. I've gotten confused a few times lately and was hoping you could clarify. I'm not exactly sure what your question is. How does it relate to the level two? I mean, you're watching the level two. You're trying. So what I tried to do, for example, let's say there's a trigger at $50. I'm looking at the level two ask. The level two ask is at 49.95. I buy it before it hits 50. When I buy it at 49.95, my stock is going to go up and potentially shoot through 50 or pull down on me. Both scenarios justify me selling. And I'm not even saying right away. Sometimes, Tesla, sometimes I've been holding it a little longer and whatever. Now we start saying, well, what is the market doing at that time? What are other things doing? How is the offer holding up? And all these would calculate into the timing. I've gotten confused a few times lately. Was hoping you could clarify. For example, today, your today was February 9th, so I won't be able to go back to it. I was watching the Netflix Mark V between 10:10, 10:20. The high of the 10:10 bar was 562.19, and the next 5-minute bar did momentarily spike up. Well, did it trigger? Just because it printed 562.41, it might have not triggered, especially on a Netflix. Though you kept saying it hadn't technically triggered. Right. I'd been watching the level two and I didn't notice anything print for under 100 shares. That's irrelevant. Was the bid at 562.19 or higher? And then it printed 100 shares on the offer and the bid stood there for at least half a second or a second that your human eyes could like even interpret it, then it triggered. And even if it printed 562.41, was that the best offer? Or was the offer at 563 when it printed 562.41? There's a video I give on what I define as a stock algorithmically triggering. For free, of course. Somebody wants to share that with you. I'll have to dig deep down. I'd been watching level 2, so I didn't notice anything print for under 100 shares. So when the 10:15 bar came around and I was confused as to what the actual trigger was it going to be? And I missed. When you say I'll let you know when it triggers, are you basing that on a 100 share minimum print in the level 2? I'm basing it off what I consider a trigger, which is a bid at the trigger level or higher, followed by a 100 share print or more on the offer of the stock while the bid is sitting there for at least half a second to a second. And at that point, it triggers. So even on the next 5-minute bar, if it never triggered 562.19, the new trigger wouldn't be 562.41. It would actually remain as the old 5-minute bar of 562.19. Hope that helped. All right. Been doing a video for a while. Hope you guys enjoyed this video. Thumbs it up if you enjoyed it. Happy trading, make money. We'll see you guys next time on the Newsbeat live trading broadcast. Links in the